welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest cues from the day's trade, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. What we'll also focus on is on the IT sector right ahead of the Q2 earnings season that kickstarts tomorrow with TCS reporting its numbers. And what can you really expect here? What should your strategy be? Everything coming in. But first up, a quick look as to how the markets are trading at this point in time. Remember, 150 points of a surge is being seen on the Nifty right now. 19,662 is the current level at which the Nifty is really trading at. What's supporting the markets? Well, overall, most of the sectors are trading in the green after having recovered from yesterday's dip. A percent rise can be seen on the Nifty Bank as well. So the financials, the heaviest weighted sector, are also contributing pretty well in the markets. What's also doing very well is the realty space, 4% higher in trade today, and it is the top sectoral gainer today, 4.3% uptick now for the Nifty Realty, followed by PSU banks that are up by 1.3%, recovering from the losses of last two trading sessions. You also have the auto sector that's taken some kind of an uptick is being seen here, 1.5% uptick for this one. The broader markets, mid and the small caps are also doing pretty well, over a percent surge for both of these in today's trade, followed by private banks, financial services, Nifty banks. So it's the financials and in fact all the rate sensitive sectors that are doing very well in the markets today. The IT sector, 0.5% of a rise, metals, oil and gas, FMCG. So all the sectors are up into the green today. The stocks that are buzzing in trade as far as the Nifty gainers are concerned, you do have Coal India that's up by 3.5% as the top sectoral gainer. There are reports suggesting that the biggest dividend might be coming in of 30 rupees as well for FY24 for this company, and therefore you can see some uptick coming in. Adani Ports, that's another stock that's seeing an uptick today, about 2.6% higher. Remember, yesterday, because of the knee-jerk reaction of the Israel-Hamas war, we had seen the stock dipping, and today again it's up in trade. Bharti Airtel, Kotak Mahindra Bank, SBI Life, Tata Motors, the top gainers on the Nifty index. When we talk about the losers, you have Cipla, IndusInd Bank, Hindalco, Dr. Reddy's, TCS, and BPCL slightly down in trade. So some stocks, about 7-8 stocks that are actually not really contributing to the gains today. The Nifty 500 again seeing a lot of action. City Union Bank, IRFC, IRB Infra, you have Gujarat Ambuja Exports, Godrej Properties, all of these stocks really buzzing in trade. Sharp moves being seen on all of them on an intraday basis as well. Time to welcome our guest on the show. Mr. Vineet Bulinchkar now joins in. He's the head of research at Ventura Securities. Welcome, Vineet, and thank you so much for taking the time out. A quick comments on the markets right now. You know, yesterday we did see that knee-jerk reaction because of the war. If the war really escalates and broadens at this point in time, what do you anticipate in terms of the impact on Indian equities?
Obviously, the first impact that is going to be the oil price going through the roof, and that is going to take a toll on inflation, and the government will then have to step in to take measures to lower inflation, so which will slow down the equity cycle. So that is obviously that is at play out here. That is the the kind of the not the base case scenario currently, because it is expected that Israel will swiftly curb this menace that is upon.
Okay, but let's shift focus to the domestic oriented sectors that are very, very important to track right ahead of the earnings season. The Indian IT sector, it had a somber start to the FY24 earnings season, and now the Q2 earnings season will start tomorrow with TCS first reporting its numbers. Day after it will be HCL Tech and Infosys also. What are your key expectations this time around, especially because second quarter is usually seen as the strongest quarter historically for the IT companies? Is it going to pan out like that, or are things going to be different?
So, in anticipation of what you've just said, it's been a typical cycle that, it starts on a somber rating and then catches up as announcements come in terms of the buybacks and dividends. I don't expect great shakes to take place or firecrackers of performance out here, because there is severe challenges on the demand front, and that is going to persist. And so, I believe that avoiding these IT stocks and playing the cyclicals and the domestic oriented themes is a far better strategy than to, just play the IT stocks. And if you have been doing that so far, you have not missed out a lot.
Okay. In terms of the large caps versus mid caps, what is your expectation? See, stock performance wise, we've actually seen the mid cap IT firms doing very well. The large cap IT firms, the blue chips, the top 3 and 4 stocks have come off their lows that were seen in March. They've actually risen about 10, 12 odd percent. Valuations also not very cheap at this point in time. But in terms of the earnings per se, large caps versus mid caps, where do you see better earnings being reported in Q2?
So I think mid caps will continue to outperform the large caps, and especially those stocks which are in the the software space for the cars industry. So like KPIT, uh, Persistent, and Scient. So these are some of the stocks that should do relatively better in this earnings season than the large cap IT stocks.
Okay, so when we talk about the large cap IT names as well, because TCS will be reporting its earnings, and also the big buyback is also being something that is being anticipated, and this could be the largest ever buyback that company could, perhaps bring about. What would you say between TCS, Infosys, HCL Tech? How would you be looking at these three companies?
Obviously, I'll go with TCS because they've shown a tremendous resilience in the past, despite being one of the largest companies and having large hiring. They've been able to manage their efficiencies. They've been able to improve the mix without dipping too much on the growth part of it. So, to my mind, TCS has also managed margins better. So, I believe that TCS provides a better play at the current year.
And the industry also has witnessed some uptick in terms of order inflow over the past 2 months with a focus on cost efficiency. Is that likely to aid earnings and numbers this time?
It could be marginally positive. As you said, this is the seasonal quarter where the performance is the best. So we will definitely see a slight uptick in the efficiency numbers that come.
What about the hiring and attrition trends this time around? What is your expectation, especially on attrition? This has been a major concern over the last few years, although ebbing now. What is your own expectation?
So the attrition was mainly a phenomenon of youngsters jumping ship to exciting uh, uh, opportunities in the startup space. That fund flow has ebbed. And in terms of recruitments, I think they will not be significant because engineering recruitments have been on an absolute go slow, especially in the consulting and the IT space markets.
Okay. Also, any kind of challenges that you continue to see the IT companies will see persisting even in this quarter? Which challenges would those be?
I think the dollar challenges are getting increasingly, they are increasing in terms of risk profile. If the US dollar were to sink, then it would have a deleveraging impact on their earnings, and that is one of the biggest risks that these stocks face currently.
Okay. And also when we talk about the deal wins, the client spending that has been squeezing, is that continuing to be a challenge right now?
Uh, I think see, I have a negative bias on this sector from a very long time. So if you keep asking me these questions, I will obviously
Sure.
be providing a very biased view to the market. So I think that the status quo will be maintained as far as the deal wins are concerned, and that will continue to take place.
Why I'm asking you this, Mr. Bulinchkar, is to really understand that these issues when we talk about perhaps the client spending crunch, hiring, attrition, wage hikes, cost pressures. These are the similar kind of pressures being faced by both the mid cap firms as well as the large cap firms. Why is it then that mid cap firms have performed better on stock markets vis-a-vis the large caps?
So the mid-cap firms are better able to allocate resources as a large percentage basis of their entire pie, and and focus them on projects which are uh, you know based on select clientele. So if you are doing well in a particular segment, like as I mentioned in the car software industry, if you're in the E&R R&D space and if you're doing a lot of work there, So these are the subsectors of the broad market which are doing relatively well. Automation is reducing the need for offshoring, and if you are a large player with multi-domain exposure, you are going to see that brunt of impact come onto your top line as well as on the margins, and hence your mid cap IT are doing significantly better than your large cap stocks.
Okay. Now, if I have to ask you to name top two expectations of best earnings versus worst earnings that could come about, what would you name?
Uh, it's a little tricky question, but I think TCS will surprise the market and on the upside. And I think KPIT is one of my top picks in the mid cap space.
Okay. In terms of the buyback, since you talked about TCS, what are your expectations? What would you advise investors to watch out for?
I think anything above 16 to 18,000 crores is a very, very good number to go.
Okay, understood that. Well, thank you then, Vineet, for being with us on this show and discussing all the insights about the IT names, especially what is to be expected from the IT earnings this time around, and your top picks from this space as well. Good to speak to you as always. 155 points of a jump right now being seen on the Nifty. All eyes on the IT sector, TCS, KPIT Tech, the two names that Vineet is positive on ahead of the earnings this time around as well. Well, that we'll wrap up this quick edition, but do stay tuned for a whole lot of news coming in from the world of business and stock markets on your screens going forward.